Have you ever looked at your profit and loss statements or your tax returns at the end of the year and thought to yourself, where did that cash go? Managing your cash is critical to the financial health of your business. And the key to running a business is to having more cash today than you did yesterday. And if that's not happening, we need to find a way to get your cash flow back on track. My name is Cherie, and I'd like to welcome you to the 60/40 Cash Flow series. This series will focus on the 14 things that you can do to begin to take control of the cash flowing in and out of your business. Over the past 15 years, working with my accounting practice clients, I've helped hundreds of small business owners to work less, earn more, and to create a business that supports the lifestyle that they want. Is that what you want? Because these tips are just the start of how we can help you do the same.
So our tip number 6 is to look at your operating costs. Now, another name for your operating costs will be your fixed costs. Now, this isn't to say that all of them are actually a fixed amount, like the same amount of rent you'd pay, or that some of them won't go up and down, like electricity, which is dependent upon usage. It just means that these are these expenses that you'll need to pay no matter how much you sell. So these are the costs that will keep the door open. We have a cash flow challenge where we ask you to really take a detailed look at your expenses and to classify them. If you'd like to join in on that, just head over to our site and check up on any of our upcoming dates. On the money meter, this affects the money going out. For similar reasons to the cost of goods sold that we discussed in tip number 5, both the impact and ease to implement will be a solid medium. This is because, again, cost cutting is only ever productive to a certain point, until it starts to affect quality and service, so it shouldn't be a means unto itself. That said, it doesn't mean that you shouldn't be looking to get the best deal or make sure that your supplier's pricing level is at the level that you thought it was, or that you're not subscribed to too many SaaS products, and just ensure that you are getting what you actually pay for. So with this one, let's have a look at our operating costs and let's brainstorm this a little bit. So let's say you're able to drop your operating costs by 1%. Or even 5%. Now, what would that mean for your bottom line? We'd love to hear the things that you've come up with, so connect with us on Facebook or LinkedIn, and if you use LinkedIn, use the hashtag GrowWith6040 and let us know what you came up with. So here's our YouTube extra content surrounding operating costs. One of the easiest ways you can do a review of your operating costs is to simply get out your past few months' bank and credit card statements and go through and highlight everything on there that are ongoing costs in your business. Then have a look and see if you really need to be paying these. If not, look at where you can cut them. If you're looking for a more in-depth look at your expenses, you can always join us for our cash flow challenge, and you can sign up for this at 6040.io/cashflow. The second thing is when costs go wrong. Now, this is more structural in your business model, and there are several things that you can do to manage your expenses well, and there are some things that will go wrong. And the wrong side of an expense will include spending too much to acquire new customers in an industry where switching costs, so moving between vendors, is low, or working in an industry with a really long buying cycle. Poorly timed matching between the income that you bring in and the expenses that you incur to make the sale can break your business. Any of these can lead to the dreaded and very stressful cash burn. But while it's actually relatively easy to cut costs, there is a limit to where cost cutting stops being productive and actually hurts your business. And it will be a balance to find that point. And first, you just need to be sure that your business model and products are actually working before you plow large sums into a turnaround. The last point here is a question. Can you achieve economies of scale as your business grows? Because as your business grows and what you sell expands, your fixed costs will go down as a percentage of that total income. And that really is all there is to achieving economy of scale. There are things that you can do that will cause you to gain an economy of scale as your production increases. And this is to do things like focus on production efficiency. Now, this can be achieved through standardized production methods. You could buy in bulk and look for volume discounts. You could look for extended terms wherever possible to lengthen your cash cycle. You could look for a greater spread of expenses, so your administration costs will reduce, and if you're looking at this on a per unit basis as your production increases, you could aim for a reduction in logistic and freight costs. You could look to obtain better freight rates for bulk transport, and again, when looking at this on a per unit basis, this will reduce as your production increases. When you send more of the same product to the same place, but for the same, only but slightly increased freight cost, your overall cost per unit will then go down.
Thanks for listening to this tip in our cash flow series. We've got more to come, so keep an eye out for them as they're released on our social channels, or sign up for our email list where you'll get a fast pass to access these tips and more. So just head on over to 6040.io/cashflow to get your access today. And just a reminder, there's 14 tips in total in this series, and we'd love to have you back. Have an awesome day.